The 2025 spring meetings of the World Bank Group (WBG) and the International Monetary Fund (IMF), which took place between April 21st to 26th in Washington, D.C., finally came to an end over the weekend, and it has been one of the headline topics of discussion since then, as many people have continued to ask questions regarding certain key developments from the meeting, especially with regards to Africa and Nigeria more precisely. Hello and welcome to another special edition of Frontline, brought to you by iTele Media, where we aim to attain a more informed and well-educated citizenry by bringing you very relevant, timely and informative content. My name is Choma Otie and I'll be your host for today. On today's edition, I'll be unpacking development from the just concluded 2025 IMF and World Bank spring meetings, focusing on projections for Nigeria and the discussions sparked by the World Bank's latest report on poverty in Nigeria. Let's unpack what this means to our nation's economy and its people. Starting off with the economic growth projections. The World Bank anticipates Nigeria's economy to grow by 3.6% in 2025, attributing this to improvements in non-oil sectors like services, ICT, and transportation. On the other hand, the IMF projects a slightly lower growth rate of 3.0%, highlighting concerns over inflation and external shocks. Now, the divergence in these projections underscores the complexities of Nigeria's economic landscape, where optimism in certain sectors is tempered by caution over macroeconomic stability. Now, let's look at the inflation and currency dynamics. Inflation continues to remain a pressing issue. Nigeria's inflationary trajectory remains a key point of divergence between the World Bank and the IMF. According to the World Bank, inflation is projected to ease to 22.1% in 2025, down from 26.6% in 2024, with further moderation to 15.9% by 2027. The World Bank forecasts a decline to 22.1% in 2025, down from 26.7% in 2024, suggesting a positive trend. However, the IMF maintains a more pessimistic view, forecasting average inflation at 26.5% in 2025, rising sharply to 37% in 2026. Interesting figures, interesting contrast between the two financial institutions. Additionally, the Naira's depreciation by over 40% in 2024, as noted by the World Bank, has significant impact for import costs and overall economic stability. Let's move our focus now to the poverty projections and public reactions. A particularly contentious point from the spring meetings is the World Bank's projections that poverty in Nigeria will increase by 3.6 percentage points by 2027. And this has sparked outrage among Nigerians who question the accuracy and implications of such forecasts. Interesting, I must say. Critics argue that these projections may not only fully account for recent reforms and initiatives aimed at poverty alleviation, calling for a more nuanced understanding of Nigeria's socio-economic dynamics. Now, looking into human capital development initiatives. In response to these challenges, the Nigerian government, in collaboration with the World Bank, is focusing on improving the country's human capital index through the HCD 2.0 strategy. This includes initiatives like the Nigerian Youth Academy, aimed at enhancing education and employment opportunities for young Nigerians. These efforts signify a commitment to investing in the nation's most valuable resources, which is its people. Lastly, let's see the global economic context. It's important to consider Nigeria's economic outlook within the global context. The IMF has lowered the global growth forecast to 2.8% for 2025, citing trade tensions and policy uncertainties. Such global dynamics inevitably impact Nigeria's economic trajectory, influencing trade, investment, and financial flows. Understanding these interconnections is crucial for formulating effective domestic policies. let's take a look at some critical questions and analysis. You might be wondering, what factors contribute to the differing growth projections by the World Bank and IMF? Just like I'm wondering as well. I believe the World Bank's optimism stems from anticipated growth in non-oil sectors, while the IMF remains cautious due to inflationary pressures and external vulnerabilities, which influences their differing outlook towards the economy. You might also be wondering, how reliable are poverty projections and what methodologies underpin them? Do these projections always come to fruition, or can they be averted by the course of events? Poverty projections are useful but infallible. They are based on current data, economic models, and a set of assumptions about growth, inflation, and policy stability. Real life is unpredictable though. These projections often shift with new events like reforms, like shocks, or global market changes. They may not always come true and can absolutely be averted if strong policies, innovation, or external factors push the economy in a better direction. Another salient question is, how can Nigeria mitigate external economic shocks? Nigeria can mitigate these external shocks by diversifying the economy, strengthening fiscal policies, and building robust financial systems or key strategies. Conclusively, Nigeria's economic path is shaped by a complex interplay of domestic reforms and global influences. While projections vary, the emphasis on human capital development and structural reforms offers a pathway to sustainable growth. We would love to hear your thoughts about this subject, so please do well to engage with this conversation. Share your thoughts on Nigeria's economic strategies and how we can collectively work towards a more prosperous future. And we would also like to know what you think about the projections by the IMF and the World Bank. Thank you so much for being a part of the show today. Remember to subscribe to this channel if you haven't. Like this video, share this video, and turn on all notifications. Of course, my name is Chioma Otiye again, and I look forward to seeing you in the next episode.